Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll be taking you through the key events that I believe will be driving your investments in the coming days. Now moving into this week, certainly the markets are still trading on the legacy of this non-farm payrolls report that we had last Friday. Payrolls number came in just below estimates at 192,000, which was actually down on a revised higher 197,000 from February. Now the market took this with a little bit of a mixed reaction initially, but subsequently then sold off into the close on Wall Street hours. Now this has pushed into the Asian trading on the Monday morning and also subsequently spilled over into European trading for the indices this morning as well. So the DAX and the FTSE were significantly lower, but they've found a little bit of support and maybe they're going to start to build again once more. Now the other key event that was that's been pushing into this week has been the ECB meeting that came on Thursday. Now Mario Draghi had a rather significant shift in stance, where he's basically said that QE was still on the table and it could potentially be used, and they are actively discussing it. Now this is a big move, and potentially it could just be Mario Draghi just jawboning the euro lower in an attempt to bring the value down, because the ECB is still concerned about the value of the euro that it's having on inflation or lack of inflation. Now, the impact that this has had on FX markets is certainly whereby the euro has sold off last week. It's gained a little bit of support today, but I still think that this is just an opportunity to sell into any strength today, and I think that could be seen throughout the week. I think there's a resistance band 137.50 that you need to be watching out for, and I think that could be a chance to sell in that sort of area. Looking at cable, cable is another chart that actually has sold off as well on the back of last week, and it's back below that key $1.6603 pivot level, which is the 38.2% Fibonacci retracement, and that is $1.6603, and I still think that could be the area that any sort of rally is coming into. So if you get that opportunity, I think I would certainly be looking at that as a chance to sell again, because I think that cable could be coming under pressure in the coming days. Dollar yen had a significant rally higher last week, but it came off on Friday on a mini flight to safety on the back of that payrolls report, and it's almost already retraced 50% of that move. 50% retracement of the 101.71 up to 104.12, comes in at 102.91. So that was pretty much where that dollar yen corrected to on Friday, and I think that being in line very close to that 102.83 level, which had been for so long the pivot level on dollar yen, I think that could be an interesting band of support once more to come in. So just watch out for that in the coming days. Moving on to indices, as I said earlier, the S&P 500 sold off significantly on that payrolls report, and there was a big key one-day reversal, which is rather a significant change in sentiment. The VIX index also got to I think a 10-week low, but then rallied significantly in almost a mirroring effect of the S&P 500. So that also had a bullish key one-day reversal. So it suggests that markets maybe got a little bit complacent and had a sharp reversal on the back of it. The S&P 500, I think, needs to now find support above the 1830 to 1840 level, and I think that's where it will be concentrating on this week. The other thing that's impacting on the S&P 500 this week is we're coming into earnings season now, with Alcoa reporting on Tuesday night after hours, and that will certainly now occupy traders' thoughts as to where they think the S&P is going to go. Moving on to the FTSE 100, the FTSE formed a bit of a small base pattern with a move above 66.28, and that actually gives us an implied target of 67.64. So a little bit of a further upside that we could see in this FTSE chart. It's just passed through the 50% retracement of the big February to March sell-off. Now, interestingly, the DAX has already retraced the entire sell-off, so that is actually now peaked out at 9,721, and it'll be interesting to see if this now can start to form support. There's a good band of support around 9,600 that you need to be looking out for on the DAX charts. Moving on to gold, there was a significant decline in the last couple of weeks on gold price, and that may be now looking to bottom out. There's a good support at 1277 on gold, and that has started to now try to form a bit of a recovery. I think that there's a good band of support between 1295 and 1300 on gold that I think you need to be watching out for this week, so just keep your eye on those levels there. Okay, so what are the key announcements that we need to be looking out for in the coming days? Well, certainly the BOJ monetary policy statement tomorrow. That is early hours on Tuesday morning. That could have a significant impact on the yen. The government recently introduced the increase in sales tax from 5% to 8%, and that could well have an impact on the economy going forward. But I think what the BOJ will probably be looking to do is to just get a gauge of exactly the impact on the economy before they potentially do any more monetary easing. I think the expectation is there will be further monetary easing, but I think probably not for this month. Also, on Wednesday, we've got the Fed meeting minutes. That's going to add a little bit more flesh to the bones as to what Janet Yellen said a couple of weeks ago, and it'll be interesting to see whether the Fed, as a committee, was in line with Janet Yellen's around 6 months view, and that'll be hopefully coming out in the meeting minutes on Wednesday. We'll also be looking at the Bank of England on Thursday, where although the rates and QE are not expected to be moved at all, there usually is an interesting outlook as well. Finally, we've got finally we've got Chinese trade data and also the inflation towards the back end of the week, and that could certainly also have an impact on risk sentiment, especially considering the recent slight bit of stimulus, fiscal stimulus that the government the council introduced recently, and the expectation of potential further monetary easing as well. So that's coming at the end of the week. Okay, so that's this week, and I wish you good luck in your trading. Don't forget that you can check out all our information on our website with the daily morning reports and the trading blogs that are throughout the day. If you're on Twitter, you can follow me at HandTechRich, and I wish you good luck in your trading. And thank you very much for listening, and thank you.